Hi, I'm Lee Harris from Emoji Trading, and in this video we're going to introduce our powerful EmojiZone visualization tool, which enables you to assess the strength of supply and demand at support and resistance levels. We introduced EmojiZones as part of our version 2.12 update, so let's have a quick recap on how we've historically visualized order flow, supply and demand before this release. We'll also set out some key terminology, and then we'll explain how EmojiZones can really help your decision making when you're trading. Before our release of EmojiZones, we've provided various indicators that have identified key price levels that are based upon support and resistance, the underlying supply and demand within the market. For example, price rejector shows when buying or selling is reducing, in other words we're experiencing exhaustion, and this lack of buying or selling is combined with aggressive trading in the opposite direction. Another emoji indicator, unfinished business, shows us when the market has moved back from a price level, but we have not yet run out of buyers at a high price or sellers at a low price. So there's a reasonably strong possibility that the market will revisit this price level because there may well still be buyers willing to buy at this high price or sellers willing to sell at this low price. Until the market revisits the unfinished business price level, the presence or otherwise of the supply and demand is unknown. As you can see, on this chart with price rejector and unfinished business, we can use emoji indicators to identify these price levels. Our order flow suite has always been able to extend a zone forward from price levels over a fixed number of bars. This is useful to let you highlight the price level to watch its behaviour when price returns there. On price rejector, for example, we're interested to see whether a zone fails when it's revisited or whether it holds. If it holds, it can be a good sign of a reversal. Also useful has been the feature of extending the price level out until price trades there again. On an indicator like unfinished business, where the price level can act like a magnet, this provides us with a good visual reminder of the presence of a level that's interesting to the market, and it gives us a potential exit target that allows us to look for a suitable entry with a favourable risk-to-reward ratio. We've combined both of these existing display types into a new visualization that we call an emoji zone. However, there's something even more powerful that an emoji zone can indicate. A brand new visualization option within EmojiZones is the Dynamic Support Resistance display. What this does is highlight the price level as it forms as support or resistance, and then monitor order flow at this price level to understand and indicate the extent to which the price level is holding. On many trading sites, you'll see phrases to the effect that the longer a support or resistance level holds, the stronger it is. With the EmojiZone Dynamic Support Resistance display, you'll actually see that this is rarely the case. Saying that the longer a level holds, the stronger it is like saying that if you're playing Russian roulette, the longer you stay alive, the better your chances of survival. Let's look at this in terms of probability. If you're crazy enough to load a gun with a single bullet, spin the chamber and put it to your head, each time you pull the trigger, your probability of taking a really big loss is 1 divided by how many empty chambers remain. So assuming a 6-chamber weapon, the following probability applies. So let me ask you, if you had pulled the trigger 5 times and you were still alive, how confident would you now feel about the 6th round of the game? Keep this in mind when you think about price trading at a support or resistance level. We've got traders chipping away at supply or demand. A support level shows that there is demand, someone is buying. Do you really think that there can be infinite demand? We will surely get to a point after repeated selling at this price level where there is no more demand, and that's when the support level will break. So now thinking about that and thinking about Russian roulette, do you really think that the more times a support or resistance level is visited, the stronger it becomes? I'd like to suggest that the more times a support or resistance level is visited, the weaker it becomes. Let's see whether or not this is the case. Order flow allows us to see the creation of support or resistance levels by identifying characteristics of supply and demand at the price level in question. The order flow event, for example a zero print or a thin spot or a stacked imbalance, maybe price rejector, this event immediately tells us that we have a significant level of supply or demand in the market. We don't need to wait for the first retest to validate this. The actions of the large supply or demand in the market have left their footprint. By then considering order flow using concepts including exhaustion and absorption, when price next trades at this level, we can determine whether the level held, whether it's likely to break, or in fact if it's actually broken. This is exactly what EmojiZone dynamic support resistance displays. As soon as we have identified a supply or demand level, we mark it as new support or resistance by displaying a solid zone. Each time this zone is revisited, we then update the zone's appearance to reflect whether it's a new support level that's been tested and has held based upon the order flow. This is something we regard as tested strong support, and we indicate it using a hollow zone with a solid outline. Alternatively, this support level may have been tested, but the order flow suggests that the level has now weakened. We call this tested weak support, and we visualize it with a hollow zone that has a dotted outline. Very simply, the fewer markings that you see on the chart, the weaker the strength of what you're seeing. If we have a support level that's been tested and it's broken, it's now likely to change role from support to resistance, and we mark this as broken support, in other words resistance. And we indicate this as a solid zone in the opposite colour. Once we again trade at this broken level, we consider order flow once more to highlight whether we've tested strong, a hollow zone with a solid outline, or tested weak, a hollow zone with a dotted outline. After the zone that reversed its role finally breaks, we stop drawing it. Now I've talked this through using support. All of these states apply, of course, if it's a new resistance zone. At first this might sound a little complex, but think back to this like a game of Russian roulette and it becomes easy to understand. As we get to a new support or resistance level, as it's tested more and more, it will ultimately break. The EmojiZone dynamic support resistance display allows you to assess the likelihood of it breaking so that you can make appropriate trading decisions based upon the strength of the supply and demand at the price level. This visualization can work really well just by using a few indicators. Here you can see a 5-tick reversal chart of ES, and we're just using price rejector and unfinished business. You can see how the arrival of a new unfinished business level has created untested overhead resistance. At this point, we can start considering to look for an entry. At this bar, we can see a price rejector that's bringing new demand or support into the market. So we know that we have untested resistance above us from the unfinished business. We also know that there is new demand underneath us. We've got a defined level of upside opportunity, reward, between the price rejector, if its level holds, and the resistance at the unfinished business. We've also got a defined level of risk if the price rejector level in fact does not hold when it's tested. This gives us a really good risk-reward ratio trade with a decent probability that's based upon the simple principles of supply and demand whose state and strength have been highlighted by the EmojiZones. Let's look at another chart. The only indicator we have on this chart is emoji trading zero print. A zero print is actually quite a low frequency occurrence on ES. Now look at how the zero print levels hold upon their first test, and also look at how once they've broken, they change role from support to resistance and vice versa. I really encourage you to experiment with our new visualizations that are provided by EmojiZones using only a handful of our order flow indicators, and see for yourself how the market really does indeed have a memory, and how the notion that the longer a support or resistance level trades, the stronger it becomes really is not the case. Very often we have potential users asking whether our order flow indicators will give buy and sell signals, and our answer to this question is an absolute no. What our indicators do is allow you to see the strength of supply and demand in the market so that you can make an informed trading decision. This answer puts a lot of people off because they're looking for some kind of holy grail. They want a magic 100% reliable red and green arrow that doesn't require any work or understanding. The reality is that our most successful and profitable users use our indicators to help them understand supply and demand, and our indicators act like training wheels, helping to visualize what's going on, and this allows the trader to free up their thinking time in their brain space to allow better and clearer decision making. Using EmojiZone dynamic support and resistance, combined with a basic understanding of what these visualizations mean, you can actually get very close to this magical red arrow, green arrow way of trading. As you can see from these assorted examples, once you know the state of the support or resistance at various price levels, you can make well-informed decisions about what to do when price next trades at these levels, combined with well-defined and tight stops that will limit your risk. This in fact is the basis of trading on a prop desk or how locals traded in the futures pits. You'll look at a number of levels like the previous day's high and low or daily pivots, and you'll be watching for supply and demand at these levels, or you'll be watching for the large trader from JP Morgan to walk into the pit to execute an order. And very simply, you'll look to trade in the direction of the prevailing supply or demand. With the visualizations that EmojiZones provide, you can now see the price levels that are important, the strength of supply or demand at these price levels, and you can lean on the larger traders that are creating this supply and demand to increase your likelihood of being on the right side of the market. With this insight, your personal trading success comes down to your discipline of not chasing entries and also your respect for the tight stops that these visualizations enable. EmojiZones are available on all of these indicators contained within the Emoji Trading Order Flow Suite, and you can learn more about all of these indicators and EmojiZones at www.emojitrading.com. Thanks for watching.